Hi, I'm Nussbaumer from macrobeat.co.uk. Well, for this recording, I thought I'd quickly put off the tin helmet, just that I look better on TV. But it's really extraordinary what's going on in the last few weeks, last week, and particularly this week, that I've seen a 50 basis points emergency cut by the Fed, something we last seen in 2008. We had rate cuts by the RBA, by the Bank of Canada, and we can expect the ECB and the Bank of England to cut in the next 1 or 2 weeks as well. Obviously, like I highlighted last week, rate cuts are not solving the problem, and I guess the price action in equities pretty much show that there is more needed. Large targeted stimulus and rate cuts just will not do the trick. The other worry I have is that obviously, the China is different in terms of political structure. They manage to quarantine 200 million people, something that will not be possible in the US or in Europe for that matter, which means the virus number is going to probably get higher and the peak is going to be a lot later, so it's going to hang around a lot longer, which means the economic damage could be bigger too. While we could see a V-shaped recovery in China, we might not see that in the rest of the world. The first slide I want to show is just exactly what I just mentioned. This is the Chinese manufacturer PMI. And I don't think we need to be rocket scientists to see what happened when China just closed the economy for a good 4, 5, 6 weeks and only, slowly getting back to work. This is obviously about the same picture we can expect in Europe, maybe not at this stage that early because our economy is not completely shut, but the impact will be felt strongly. The next chart is just to sort of sum up what we've seen in the last few days, the sort of point moves on the Dow in the last 10 days. And looking at the futures right now, already showing down 600, you can expect rather a deep red again for today. So the market is in panic, the market is nervous, and I think the emergency cut by the Fed has just added to the panic rather than done anything. The next chart we see is the Dow, just the real Dow. We have a 24,718 low on the 61.8 FIBO level. That's where we bottomed out in this correction, and that is for me the real make or break level going forward. If we start to take out that level, then we have to go to the bigger charts, the broader charts, and we're talking about really a move that could easily go back towards 20,000 or worse if things get a lot worse. The next chart is the dollar index. I just sort of zoomed it in, just sort of the 1 year that we just see what's happening here. Obviously, the dollar started to roll over at that point when really stocks started to roll over, as the market already started to price in Fed cuts. And this is what we see now. The central bank with the most bullets is obviously the Fed, and the Fed may have to again bail out the world in a sense that the Fed can cut rates a lot more than anyone else. For the ECB, we think about 10 basis points next week, which is nothing compared to the 50 basis points cut from the Fed this week. And we're already pricing another 50 basis points cut for the actual Fed meeting in March, which would see, if it happens, 100 basis points cut. So you can imagine the dollar is just going to roll over completely. On the next chart, we have the broader dollar index. The reason I show this is really where we are in the bigger picture of the last 2-3 years. We're actually below that green flat line right now, as when I sent out the charts, we were still above that level, but we are now below. So really what we talk about is the potential of the dollar to completely roll over. And if things continue as they are, there's a high chance of these to just go completely horribly wrong. On the equity side, just to talk about the general risk complex, yes, the market is in panic. Yes, we can see a bounce, but given that the story only just starts in Europe and the US, this can just be the beginning of market turmoils and whatever. And reality is there is no quick fix. So we have to go through this. That means probably more market weakness, and government finally have to step up and see, what kind of measures in terms of stimulus they can do. Sorry, on that note, I still wish you a very lovely weekend, and we talk all about this again next week. Thanks very much indeed. Bye-bye.